Last year in our ETF sustainability products, we had $12 billion of flow for the entire year. In the first 6 months, we had $17 billion of flows. So this is not our money. Our clients are looking to invest in more renewable, sustainable products. That's not starving other sectors. It's just a surge of investments in new energy, in new technologies. So so what we're witnessing worldwide is a surge of interest in clients looking to put money in more renewable components of energy. And that surge is going to continue. And so if you think about our energy network today, we're using now more renewable energy in the United States than coal. That's continuing to do that. We look at that as a good thing. So we are responding to our clients' wishes, where they want our money, where they want their money to be placed.
Larry, you're also taking a lead role yourself. You even point out that you've identified 244 companies that are making insufficient progress integrating climate risk into their business models. We took voting action against 53. Yes. So you're actually you're doing certain things as an activist, and I'm just wondering whether that's an appropriate role for you. Would you do it for pro-choice versus? Go ahead.
So let me tell you what we did. In my 2020 CEO letter, we asked for companies to report on TCFD and SASB. And many companies have not moved forward, and that's what we're asking of them. We're looking for better transparency in how they are navigating their company, and that's what we're doing. We have not made big, bold changes, but we're asking for better disclosure. And I don't think there's anything wrong about asking for better disclosure across the board. And I think going forward, we are seeing more and more companies doing that, and they're doing it because it's good business for them. The one thing that is very clear in this COVID world that we're living in, beyond the sustainability world, Joe, stakeholder capitalism is only going to become more and more important. And the companies that focus on all their stakeholders, their clients, their employees, the society where they work and operate, are going to be the companies that are going to be the winners for the future. And we do believe these issues around social issues and how they operate, and this is why we ask companies to report under SASB and under TCFD, so we can truly understand how they're navigating around this whole long-term trend of climate change.
Right, but
we believe more than ever before, Joe, that climate change is investment risk. And we're seeing that through our clients and how our clients are allocating capital. We're not denying capital to the energy companies. If our clients want to put money in the S&P or in a specific energy fund, we are not denying that.
Do you think
the only segment where we said we're not investing it is in thermal coal? We are not denying investments in other components of hydrocarbons. We're working side by side with many of the great energy companies. And in many cases, some of the leaders of these great energy companies are trying to transform themselves and moving forward.
Okay.
And so I don't want to get involved in a political commentary, but much of what was said was so conflated. What we are doing is trying to move everybody forward, but we're not an activist.
But the Boyd and Gray piece. So then you're saying he conflated BlackRock with these banks. Do you think it's appropriate for banks to be cutting off capital to companies that are doing hydrocarbon exploration? Do you think there's a risk that we lose a lot of these very high-paying jobs, that they're actually taking an activist role in picking winners and losers in what should be a free market decision on how we move forward? You said, oh, that's the banks doing it. We're conflating you with the banks. Do you think the banks should be doing it too, Larry, to affect
I don't think banks. I think banks are strong capitalist organizations. I think they also look that climate risk is investment risk. So they're navigating their portfolios. I don't want to respond to any one thing, but I believe they are very good at allocation of capital. They're actually withstanding the COVID crisis very well, despite their reserves. I'm not here to I don't know what they're doing in terms of holding back capital. I don't see that myself, but I can't respond to it. But once again, if you truly believe that climate risk is going to be an investment risk, and you're trying to navigate your asset allocation, that's a proper response. That is not an antitrust issue. That is an investment decision. When you think about the young people who are joining firms like at BlackRock, we have our training program this year remotely. Very different results versus being in office working side by side with people. But think about these young people who are joining the workforce now. They were quite young during 9/11 in the United States. They were young teenagers during the financial crisis. And now they're entering the workforce, and we have COVID, and they're working remotely. I believe their life's experiences are so vastly different than, well, my life experience. I was innocent and had an idyllic childhood. I think the experience of these young people today are vastly different, and their behaviors are going to be different. And quite frankly, this is just getting back to what Joe was talking about related to sustainability and environmental. The young people in all our surveys are more vigorous in terms of the protection of the environment more than ever before. I think the existential risk of COVID, the racial inequalities that we've witnessed in the last 2 months, I do believe the younger generation is going to be more vigorous in terms of social issues and environmental issues. And I know that in BlackRock's own workforce. And this is not just going to be a slow change, but I actually believe we're going to see an accelerated attitude towards these issues. And I do believe this is why I've been so vigorous in myself in making sure that BlackRock is as purposeful as we can be, and why stakeholder capitalism has to become a major component of what every business leader is focusing on.